I think the way you invest in Brisbane is like this. Don't expect Sydney returns. Don't expect Melbourne returns. Expect a nice yield that's genuine. It is a genuine dividend yield. And there are a lot of real estate investments right around the world that have fake yields. You can go into Dubai or anywhere across the Middle East and get this 15% return or whatever it is in a hotel, but it's not real, right? Dig under the bonnet, and an economy that has a cash rate at 1% ain't giving you 15% genuine real estate returns. You can go to Turkey and Istanbul and get a 10% rental return, and guess what? That's only for a year or two. Then there's a shock. But you can come to Brisbane and you can come to Australia and get a genuine 5% set and forget quality sustainable dividend yield on a block of land or something with land content, or as you said, something in the heart of the economic center as an apartment, and that's a genuine 5-6%. Then there are options that you are not paying for. The Olympics is an option that I get in my pocket for free, and if they don't get it, I'm not losing sleep, right? My investment is not predicated on the Olympics. The Commonwealth Games came on the Gold Coast. Nothing really happened, right?
No,
Maybe it's just because the Commonwealth Games are not as prominent. And then there's Queen's Wharf, as you said, the biggest casino in Australia. And why is that important? Because Queen's Wharf is really an integrated resort that's co-developed by Hong Kong conglomerate, and it is a way to attract people that would go to Macau to come to Australia, and they bring their families with them because the Gold Coast and the theme parks are an hour away. And when they come there, they might say, hey, we should buy an investment here, or we should build our business here, or this is fertile grounds for opportunity. These are all options. However, don't expect to get everything. Don't expect a 5% yield in a house and 500 grand and 30 minutes from the city and 20% return. If you want 20% return, stick to London. Go and pay £2.5-3 million. Go and buy in White City. Go and buy the Cross Metro. But your return, your money in is your barriers to entry are 4 or 5 times that of investing in Brisbane.
Yeah, it's interesting. And touching back on your point about people coming in from Macau, for example, and if they do bring their family and say they see it as a place that they can send their kids in the future for tertiary education or even secondary education, I think that's another driver for the state itself. And I think as well, touching back on the point of migration and the numbers that are coming in at the moment, they're going to have to eventually service at an educational level. These people that are coming in, they're going to have families, they're going to have kids, and there's not enough schools in Queensland at the moment, you could say, to cater for it. So I think that's, and it was mentioned in the budget the other day, but the need for further education in Queensland, which will be good. It's another driver for the state.
Definitely. Real estate is a network asset, right? Real estate is a network asset. And what does that mean? The bigger the network gets, the more valuable your asset is. The more schools, the more children, the more parents, the more teachers, the more people selling to the school. And unfortunately, Brisbane has vulnerabilities around its networks. The best universities in Australia aren't in Brisbane. The best hospitals aren't there. Virgin, for example, Virgin Airlines had its base in Brisbane, and we got hit by a pandemic. So there needs to be another 10 to 15 years of momentum until you get that thing really firing. But again, you're not paying for it. They're free options, right? The reason why Google opens up its base in Sydney, or Facebook or WeWork or all these businesses is because of the network. They can get network of access to certain type of staff, resources. They can expand into Asia. Brisbane hasn't got that yet. So while we're very bullish on it, there's still room for improvement, but it has value. And if you do get those, your investment is going to do very, very well. One of the things people forget is in 2003, Brisbane had a 40% growth year. The median price in Brisbane grew by 40% in 1 year. Now, that's not necessarily good because it paid the price for the next decade, and it's
yeah.
still paying the price. It's still sub, but there is room for growth once there is action and once the price gap between Sydney and Melbourne gets so large that people pick up, pack the car, drive up and say, I'm living here.